Well, just moments ago, the White House laying out a tax plan that will provide major benefits for businesses, both large and small. But what does that mean for you and, of course, for your money and your return? Well, Gerri Willis, she's the expert on this. She joins me now with a lot more. What do you know, Gerri?
Hi there, Cheryl. That's right. Though the Trump tax reform plan, as you say, saves the biggest tax cuts for small business and corporations, it will have big benefits for regular Americans. The top individual tax rate will drop from 39.6% to 35%, a move that will help high-earning Americans. And there's also good news for low and middle-income Americans, a doubling of standard deductions. That's the folks who use the short form. The first $24,000 worth of earnings will not be taxed for married couples filing jointly. Now, while the current tax code has some 7 personal income tax brackets, the Trump plan will squeeze that to just 3 brackets, 10%, 25%, and 35%. What's more, it will repeal, get this, the alternative minimum tax, the bane of existence for middle-class Americans, and the death tax. According to the Treasury Secretary, though, the only safe deductions, and people live by these, for individuals will be the mortgage deduction and charitable contributions, meaning that state and local income taxes, we don't know what happens if you get that deduction or not, maybe not. The biggest cuts go to business, though, cutting the corporate tax rate and the rate paid by small business operators filing as individuals to just 15%. The administration has said that move could unleash a torrent of investment and expansion that could benefit the jobs market and provide, well, new opportunities to people looking for work. Currently, the IRS processes over 13 million returns by small business operators. Jobs and infrastructure could also be a huge benefactor of the proposed plan. The White House will reportedly greenlight a plan to allow corporations to repatriate overseas earnings and pay just a 10% tax. Now, whether the plan will get traction with the president's own party is certainly yet to be seen. Cheryl?
Well, you know, Gerri, there's something that you had flagged during the news conference of the White House to all of us internally, and that was about the state and local deduction question. There were some follow-up questions from reporters in the room. Are you clear? Do you get a sense of what that is going to mean?
Well, here's what it could mean. There are 3 major deductions that Americans take, and we talked about all 3 of them, right? We talked about the state and local income tax. We talked about the mortgage deduction and charitable deductions. Mnuchin, in that conversation, said only 2 of those are safe, charitable and the mortgage deduction. That leaves the deduction of state and local income taxes. And for people in the Northeast and other large cities all over the country, that is a critically important tax break for them. So I can't imagine that liberal legislators in big cities all over the country are going to be jumping up and down about this so pretty soon.
You have to wonder if maybe that information was omitted. I don't want to, be critical of what.
We have to wait and see.
Maybe, because we knew we weren't going to get everything today. Maybe it's just something that will be clarified later by maybe from somebody from Treasury, because your point is very valid on state and local taxes.
Fingers crossed.
Yeah, Gerri Willis, great to have your insights. Thank you, Gerri.
Thank you.